Yeah, I would say that any trader, regardless of whatever perspective you're coming from, again, whether you are currently only long only in alpha assets and want to take principled risk management strategies around that, to traders that are more algorithmically oriented, to view MegaTAO as another tool for you to be able to express whatever convictions you have, right? Whether these be short-term convictions or longer-term convictions, I think MegaTAO we aspire for this to be the platform for you to be able to do that. We talked about our routing mechanism, that being entirely on chain. You have, for example, seen off-chain order books, right? So for our design, we wanted to have that component of that component of it on chain, and the same applies to our Oracle piece as well. That is entirely on chain, right? And that minimizes the attack surfaces from a technical perspective that you can have.
It's going to be great for traders, but I don't think MegaTAO is going to just be used for traders, and I don't think it should be. I think even if you're a long-term investor, long-term holder on some of these alpha tokens, you should consider using a MegaTAO, adding a 1-2x leverage to hold those positions long-term. You can actually add a little more leverage to get a better return on those positions. He told me about MegaTAO, how they were building it, and that was definitely something that I wanted to be a part of. Got a chance to meet Khan, and we really just hit it off from there. And bringing in my expertise of the kind of trading aspect, understanding how MegaTAO is going to be built out, being that first kind of DeFi primitive product on Bittensor really excited me and really just kind of sparked an idea with me and brought me here today. And I think we're going to actually do some great things within that ecosystem.
Welcome to the Ventura Labs podcast. Today, we're joined by Canh and Craig of MegaTAO to discuss building the first perpetual DEX on the Bittensor EVM. We cover their choice of EVM over a subnet, the mechanisms of their dual order book and vault routing, and risk management for leverage and liquidations. We examine their Sum of Subnets index, plans for non-TAO collateral, and integrating DeFi primitives into Bittensor. Now, back to Canh and Craig with the 86th Ventura Labs podcast. Canh and Craig of MegaTAO. How are you guys doing today?
Very well. Thanks for having us. Hi, Grant.
Doing amazing, doing amazing.
Absolutely. And we got introduced through a mutual friend, Ken Miyachi of BitMind. He was both of your introductions to Bittensor, I believe. So could you just walk me through how both of you guys became acquainted with Bittensor?
Yeah, I'll take that one. I actually was introduced to Bittensor directly as a job. I saw what the Subnet 34 was doing, what Ken was doing in the security AI area, and was really compelled by the opportunity set there. So I came into Bittensor roughly a year, just under a year ago at this point, to help them build out the product suite on top of the Subnet that they were building for the last few years. My attention quickly shifted to the MegaTAO initiative after getting to know the space and in speaking with the folks at 34 as well. It was a clear opportunity to me that the market for DeFi primitives it was just very early, right? Surely you've seen a number of different efforts that have been in a range of success over the last few months, but to us, it did feel like building a synthetic perps protocol made a whole lot of sense. And so that's what we spent. That's what I've spent more of my attention on over the last. Gosh, we started building this in the summer of last year, so really in earnest over the last 6 to 9 months. You've seen that the product went live in beta earlier this year. We've gotten some decent traction there, and it was as we were building the product and determining the viability of it in this market context, where we needed boots on the ground, people who knew, lived and breathed DeFi, and so we brought Craig on in the later part in the latter part of last year to really help us connect the trading ecosystem throughout Bittensor to this product that we were looking to build from a technical perspective. But more historically, sorry, my background, I feel like I've been a working professional forever. I started my career in investment banking proper, focused on everything from vanilla bond origination within capital markets to more strategic to more strategic finance structured transactions. I dived into the tech field about a decade ago, working in fintech, and more recently before Bittensor in the blockchain area. So I'd say my background has always kind of married the areas of finance and technology, ultimately culminating in what you're seeing here on the MegaTAO side.
And then Craig, what was your introduction to Bittensor?
So I am pretty still fairly new to Bittensor, probably about 6 months into the actual ecosystem, understanding subnets, what's actually being built. I've been a fan of Bittensor, an investor in Bittensor for a while, particularly trading it because of the volume and how it moves. But that was kind of my first introduction. From my just background in general, I spent a lot of time in the crypto blockchain space, where I really kind of made a lot of ways in my career. Was working for a company called Chainalysis. Spent a lot of time there. Did everything from working in support when I first got there to then moving up, kind of building out a data engineering backend for their DeFi pipeline. And that's kind of what got me into the whole DeFi space in general. Ultimately, ended up leaving there to go trade for a year and kind of just build my business, build my brand. And as I was trading, had a chance to meet Ken. He told me about MegaTAO, how they were building it, and that was definitely something that I wanted to be a part of. Got a chance to meet Khan, and we really just hit it off from there. And bringing in my expertise of the kind of trading aspect, understanding how MegaTAO is going to be built out, being that first kind of DeFi primitive product on Bittensor really excited me and really just kind of sparked an idea with me and brought me here today. And I think we're going to actually do some great things within that ecosystem.
Talk me through the design of MegaTAO. It's built on the Bittensor EVM. Why was this choice made instead of going the subnet route or some other layer two?
Yeah, good question. We thought about this pretty critically at the outset of things, right? What you want to build is something that is composable. To us, it was important to have something built that is composable into other DeFi primitives that are being built in the space, right? And so kind of naturally, we went with the ecosystem where there's a whole environment that was set up to do that. As you guys may be aware, the EVM was stood up just over, it was the beginning of part of last year, to build out the application layer, and even the DeFi layer on top of Bittensor itself. So from an environment's point of view, it made a whole lot of sense to build it on the EVM. Now, in terms of in terms of the tool set and the building blocks that were available to us, building on the EVM made even that much more sense, right? The wallets that people are familiar with, it's in Solidity that is very well established as a building language at this point. Um, the efforts that you're seeing outside of what we're looking to build on the synthetic side of things as well. It just made a whole lot of sense to build on the EVM. We did think about the subnet side of things, and that brought us to think about, if we were building if you're building a perpetual if you are building a perpetual DEX, right? What is it that would incentivize traders to use it, and what is it that would incentivize liquidity providers to be attracted to your protocol, right? The model in which we built it follows the best practices that you've already seen in the space from other perp dexes that we've taken a lot of inspiration from, right? So the incentive mechanism of having funding rates that are in place, trading fees that are generated, all of that is kind of built into the model that we have, as opposed to looking to reverse engineer directly from the subnet. So from multiple angles, building it on the EVM made a whole lot of sense for us.
You referred to other perp dexes. What are some perp dexes you guys have either used or looked at when designing MegaTAO?
Yeah, I mean,
Uh,
we've taken it. Go ahead, Greg. You can take this one.
I was gonna, so Khan's probably gonna speak to a couple different things. I'm going to actually talk about the ones I've used and the things I'm actually comparing them from, because I've spent a good amount of my time trading, been a part of a couple different communities in terms of that. Some of the ones I've used that were modeling things off of Hyperliquid, Aster, even Axiom, for example, and kind of looking at some of the models that they used, along with some of the things they've done, not only to reward early users, but also think about how they've actually thought about their order book, their vaults. And I think a lot of that you'll see is kind of mirrored in MegaTAO. But then I think you'll also notice some differences that we actually offer, and some of the things we'll do that'll kind of change what you've seen in the past. That'll be different, but then you'll see some of those same mechanisms, again, with being the first on Bittensor.
Yeah, that's right. Those are the names that we looked at. I think what I like to say is we build on the shoulders of giants, right? Taking the best of what we've seen in these protocols, ranging from how you deal with user interest from an order book perspective, and how you fulfill that interest from either an order book with a great depth to it, or fulfilling user interest from a funded vault that you have. Like Craig said, what we have takes kind of the best of both worlds, and it's all fully on chain. So yeah, to answer the question, we've looked at all of them, and we've pieced together the facets of them that we thought would have worked well in this case.
Craig referenced the order book and vaults that you guys use. You guys have like a two-tiered system here that I don't know if is unique or was copied from someone else. But if you could explain how that works and what that is.
Yeah, the user experience that we wanted to strive for is what we're calling instant execution. So if you as a trader put on a trade, you're going to want it to be executed. If it's a market trade, you're going to want it to be executed right away. And so there are one of two ways of achieving that. One, you have a deep order book to fill that order from, right? Which obviously, as we're bootstrapping this protocol, we're not going to have day one. And then two, you take a vault that would take the counterparty risk of the exposure that that trader wants to take on. So we thought, taking best of those both worlds, we would combine those two facets in this routing mechanism that we have in place, where we first route a user's trade through this order book, and if that order book doesn't have a matching trade, then we'll match it against the vault, right? So one of the things that we're focused on now is building out that order book feature such that we have greater depth to it.
How do you go about incentivizing that order book depth?
Yeah, there are, and Craig can perhaps speak to this a bit more, as well, as he's kind of looked at different models out there. But there are incentive structures that are in place to have liquidity that are provided at different levels of markets, right? So you have a fee structure for those that provide liquidity at different prices for different markets that you support. And those are called maker fees, right? And then you would have for those that are taking positions, those would be taker fees on the other side. So it's built into, and again, tried and true, the incentive mechanism that you build around having a robust order book in place.
And like Khan mentioned, I think it's really going to be incentive based. We are working on that, trying to figure out what those are going to be, that the best option going forward. But that's always going to be the best bet, to grow that order book and have more people providing liquidity, so we have them making money on the side, along with our traders getting the best entry and the best optimal price they can get.
The maker and taker fees, is this different than funding rates?
So maker and taker fees are a little bit different than funding rates. Absolutely. A funding rate is ultimately the way perpetuals actually work. They are ultimately, you're taking a bet whether the price goes up or down. And if more people are actually long and you decide to go short, you actually get paid for being short. So the longs actually pay the shorts. So it's an opportunity for ultimately where you can take the opposite side of a trade, essentially take that as a position, and still get paid on that position, although you're short against the market. So it is a way that one of the special things on why perps actually are one of the best kind of financial instruments, I think, because there is no expiration. You can get paid on either side, and it does allow you to ultimately hedge a position, especially when you think about alpha tokens in the sense where ultimately before MegaTAO existed, there was no way to go short. You could only go long, and you could only get that exposure.
I was reading through your docs earlier, and you guys support up to 3x leverage currently. And it's if you're at 3x, your drawdown is 23%, and if you're at 2x, your drawdown's 40%. What is the math behind those numbers?
So first thing, I'm going to let Khan take this, but we are at 5x leverage now. I don't know if you read that, but we did up it a little bit.
The drawdowns being liquidations, is that what you're referring to?
Yes.
Yeah. Okay. So we look at this from the perspective of the amount of equity capital that any position has. Right. Now, with we are in beta, and we are controlling the amount of risk that we are comfortable with, given the dual structure vault approach, or the dual structure routing approach that we had talked about earlier, right? So we initially went out with 3x leverage across all the markets that we support. We recently updated it to 5, and as we get more comfortable with how the numbers are coming together and the risk profile that we're seeing so far in beta, that would improve. That would look to improve or increase as we go forward. Now, with 5x leverage, your assumed equity capital to support that is 20%, right? So that is to say, for every tau, for if you have a 5 tau position, that's going to be backed if you're 5x leverage with a 1 tau of capital. So the margin that you have there is roughly 20%. That's the equity capital. If the market goes against you, the equity that you have in that position decreases, right? And so we currently have our liquidation margin set for all of our markets, actually at 10%. Right, so like if your tau becomes half a tau, that's where you would experience that's where you would experience liquidations within the protocol. Liquidation keepers are services that are in place to maintain the health of any protocol like this, and so they constantly survey any given position and identify those that are at risk, and would liquidate them to maintain the health of the overall protocol and ultimately the vault that's in place. Does that answer the question?
I think so. Yeah, it was more so. How did you arrive at the 40% for a 2x and the 23% for a 3x? But those could be outdated numbers. So take my question with a grain of salt.
I'll have to go back and check that one. I thought we updated it, but I'll have to go back and check.
Tell me, what is the trading strategies that you guys use, or are you guys strictly on the market maker side and managing your vaults?
I can tell you my particular trading strategy. I trade a bunch of different markets, not just crypto. I trade futures. I've traded Forex for a while. I've been a commodities trader as well. I've traded gold pretty heavily. But when it comes to trading on MegaTAO, and the alpha tokens, I have a particular trading strategy that I consider for everything else. But for those, I'm really looking for just upside opportunities. But I'm also looking for, I think one of the best things that you can do on MegaTAO right now that actually just launched is our MTSOS, which is the Sum of Subnets, which now allows me to not only just pick one alpha token that's going to go up, I can actually essentially invest in the entire sum of the subnets. And I think that is going to kind of be my trading strategy in the long term, because I don't want to have to try to pick just one alpha token, one subnet that's going to win. I'd rather have exposure to the entire kind of ecosystem. And with that, it's going to be more of a long-term ETF pullback strategy where I'm going to focus on long-term investing with some leverage at different points. into this one index. And I'm going to truly document this because for me, just understanding chart movement, understanding where pullbacks are getting in, and looking at holding this as kind of a long-term kind of swing.
Yeah, and then from my side, MTSOS is something that I do want to spend a bit of time on. We just announced it and launched it this week. But in terms of trading strategies that I use, I'm not a trader, so I don't personally have any trading strategies that I know and love. But what we want to have is have MegaTAO be the place where you can have any strategy that you want to execute seamlessly, right? And so whether that be trading on MegaTAO's UI, or we're very soon going to be rolling out an API for programmatic access, we'd like to be able to cater to as many trading strategies as we can, whether that be, if you are currently long and you want to take any risk management measures you want to any risk management measures you can conceive of, right? It's with a simple short, for example, or if you have more sophisticated trading strategies in place, we want MegaTAO to be the forum for you to be able to do that.
How complex was it to build the Sum of Subnets ETF perpetual thing? I don't know the best way to quantify what it is exactly.
How complex was it from a technical perspective, or how complex was it from what perspective are you interested in? Any.
It seems like it would be complex to build.
Yeah. So what I'll comment on our technical stack a little bit, right? So we strive to have to have as many components of it on chain as possible, right? We talked about our routing mechanism, that being entirely on chain. You have, for example, seen off chain order books, right? So for our design, we wanted to have that component of that component of it on chain, and the same applies to our Oracle piece as well. That is entirely on chain, right? And that minimizes the attack surfaces from a technical perspective that you can have. And so that applies to MTSOS as well. Fortunately, there is an on-chain an on-chain data feed that's updated on every block for the sum of subnets themselves. You can query it on the EVM. You can query it on the substrate. We started there in conceiving of this MTSOS index. Now, if you look at the historical price action of that of that index, you'll see that there's a whole lot of volatility for a confluence of reasons than what you would otherwise expect. So the MTSOS index, as we've constructed it, smooths out for that by looking at a 7-day smoothing EMA formula, right? And so you can compare the live spot prices that you get in the overall index that tracks, all 128 subnets, right? But we apply a smoothing formula to that because that minimizes the distortion from a trading perspective. So all of that's on chain. We're able to leverage that underlying query, but building the smoothing function around that was just an added feature that we included to the index itself.
That smoothing feature is interesting because a newly launched subnet starts with one alpha in the pool, so you could easily push some to essentially whatever you want.
And we've seen that, right? And we've seen that. We wanted to avoid that, again, causing trading disruption to those that are taking a position in alpha in the index itself.
You speak of all the on-chain stuff you guys have. You guys do collateral in TAO. When, if ever, will we see more collateral options be added, i.e., alpha tokens or some other cryptocurrency?
Yeah, it's on our roadmap. I would love to. I would love to see it happen. One of the things, so the way that the protocol is constructed, it takes a single collateral asset at a time, right? So we obviously went with Tau. We could have gone with some other asset like USDC, for example, which we would have loved to see. I think Tau made a whole lot of sense because we wanted to build this in a way where we have the protocol where the people are, and we, are going people who naturally have tau. But there's another class of users that don't, right? People who do want to take exposure to alpha, but have USDC stablecoin, for example. And so being able to support other forms of collateral is something that we're keenly studying, whether that be, again, USDC stablecoin or alpha assets entirely. I don't have a timeline for that, but it's something that we are looking to build in the future.
Craig, would adding more assets for collateral help enable more types of trading strategies? Maybe something like funding rate arbitrage or something along those lines, to where you have an alpha token and then you go short and then you just collect that funding rate, that premium?
I believe so. Absolutely. I think also what I'm starting to see right now, and you're going to hear me talk more about this, is the educational piece of people actually coming to use MegaTAO. I feel like DeFi in the Bittensor ecosystem is not as big. People don't know. They don't know the things you can do. They're just learning about these alpha tokens. And now with the platform that we've built, they have an opportunity to kind of take both sides or speculate on an alpha token and add a little bit of leverage to increase their position. So I think a lot of it comes down to not necessarily just opening up those different things you can use for funding, whether it's USDC or alpha tokens other than Tau, but also the educational piece of how to use the platform, things you can do. But ultimately, I think it is going to open up more trading strategies to allow people to have exposure, but also a little more risk on the speculation of the assets that they do have.
That is a great point you brought up there. The BitTensor and DeFi don't necessarily mesh perfectly. A lot of people in Bittensor almost look down upon trading and these DeFi things and things that occur in other crypto ecosystems. How do you guys bridge this gap and help Bittensor embrace the trading aspect of crypto?
I, from myself, I can tell you I've spent the last couple months in some BitTensor communities trying to educate people to help them understand. This is a natural progression of markets, and when you want markets to have price discovery and you want them to be more liquid, these are the things you do absolutely need. This is not just something that's going to necessarily pull liquidity from the ecosystem, but actually be able to give back to it, because there are people who are going to be able to provide liquidity. You are now able to, instead of just longing an asset, a subnet that you believe in, you can add a little bit of leverage to then make a little bit more on that exact trade. Or you can de-risk by then saying, you know what, let me take a short position while the market's going down, even if I'm holding this alpha token long term. So it does provide a little bit of both. And I think overall, this is just a natural progression of markets.
And in expanding MegaTAO, you guys are currently at the top 12 subnets only. How does expanding this out look like? Could you expand it on just a order book basis only, to where you don't have to be the market maker as well, or is there other plans for that?
Yeah, it's a combination of all of that, right? One, it's increasing the profile of markets that we curve currently. Now we're at 13, which include the top 12 subnets that are out there, and this MTSOS product that we just launched, right? But in order to grow, we have to grow in a number of ways. One, being able to support user trade sizes of what is now capped at 50 tau, right? Um, and so if someone comes in with a multiple of, with an ambition of taking on a trade of a multiple of that, you're going to have to fulfill that in one of two ways. It's going to be having greater order book depth, number one, or two, having greater vault collateral, vault capital to support it. And so there are features that we can add to be able to support it, and I think we're rounding that out now to have it be kind of more on more feature parity with some of the other common perp dexes that you've seen out there. But yeah, it would be growing it out in one of those two ways.
And I have to ask, since you guys are the market maker on MegaTAO currently, what is the blow up risk here of the perp dex just blowing up and is just illiquid now?
I believe because of the constraints we have with leverage, that would be very, very hard to do. And that's why have tailored that kind of leverage perspective. Unless somebody came in with a huge amount of cap, I think it'd have to be a significant amount, which I don't know why anybody would do that. But ultimately, I just don't think that's why we started out at the 3x leverage and even now at the 5x. That's why we're not at 50x, 100x, because that is where that risk comes from. And that is going to be actually upped over time. So that is one of the reasons why we don't have those things in place. If anybody's wondering why we don't have this unlimited max leverage, because we couldn't do that right now without actually harming the protocol and the traders on the platform.
Yeah, that's right. I think Craig said it well, but we are still in beta. We're proceeding with caution, right? And so we're going to, as we become more comfortable with understanding how these risk parameters that we have in place will have the impact on protocol health, we'll adjust it accordingly, right? Again, we started from 3x leverage, we went to 5. We had started with a notional cap of, I can't even remember what it was. It might have been like 3 tau or something like that, and we increased that to 50. But that was just looking at how user behavior has been since we've launched in beta. So it's a constantly, I think, evolving thing. Like there's no silver bullet in thinking about risk in general when it comes to capital and capital integrity, right? Within the protocol itself, we have the natural balancing features of perp dexes that kind of aid in this too. So if you take on, a large a large position, whether that be long or short, there are funding rates and the funding rates that you'll have to contend with, right? And from a vault perspective, also there's another dimension of protection as well. We've baked in an interest factor where the greater the vault utilization we have, that interest factor becomes larger as an economic factor that any trader has to contend with, right? So those are only some things. I think we kind of look at the vault risk holistically, but it's a combination of having conservative limits in place day one that will loosen over time, conceivably, and then having the multidimensionality of rates, whether that be funding rates or interest rates, that we have around this as well.
And this is probably, I guess, a good follow up to that. This is all handled by smart contracts, correct? So they open up a trade that's all handled by a smart contract.
Correct.
Okay. Well, guys, do you have any other topics before I ask the last question of the day here?
Follow with the smart contract point. What was the thinking around
What was
that?
the purpose of the smart contract? I just learned today that it was how perp dexes work, where it's like a user opens up essentially a smart contract and they deposit their funds when they take a trade.
Yeah, it's all fully automated in smart contract logic, right? And so what? And so uh do I have any other comments on that? I don't think I have any other comments on that. But yeah, I mean, if you look at any other, like, all of this logic is happened on is written into smart contract logic itself on the EVM blockchain. So yes.
All right. Well, here's the last question. That is, what advice do you have for traders in Dynamic TAO since you have built the first perp dex on Bittensor for subnets?
Yeah, I would say that any trader, regardless of whatever perspective you're coming from, again, whether you are currently only long only in alpha assets and want to take principled risk management strategies around that, to traders that are more algorithmically oriented, to view MegaTAO as another tool for you to be able to express whatever convictions you have, right? Whether these be short-term convictions or longer-term convictions, I think MegaTAO, we aspire for this to be the platform for you to be able to do that. And over the near term, we're looking build out our tool set to make it as useful for you as possible. Again, whether that be directly trading on the UI, for those that are looking to express not even long-term convictions, but simpler strategies conceivably, right? And we're soon rolling out our API as well, so that you'd be able to take again a programmatic view of executing on your sophisticated strategies that you have.
And I'll say Khan hit it right on the head. It's going to be great for traders, but I don't think MegaTAO is going to just be used for traders, and I don't think it should be. I think even if you're a long-term investor, a long-term holder on some of these alpha tokens, you should consider using MegaTAO, adding 1-2x leverage to hold those positions long-term. You can actually get add a little more leverage to get a better return on those positions. But then also, I think some of the long-term investors should think about looking into the product that we just launched, MTSOS, the Sum of Subnets. I think that's going to be huge because now you can invest in just the Bittensor ecosystem without having to go find particular subnets to invest in.
Craig, Khan, it was a pleasure having you guys on the podcast today. Thank you.
All right. Thanks, Grant.
Thank you, Grant.
Appreciate it.
Thanks for having us. Appreciate it.